Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, May the 1st, 2024. Well, Jerome came, Jerome spoke, the market came, the market went up, and then they all looked at each other and went, where are the buyers? Oh, they're gone, sold. And let me explain. I'm going to start here on the S&P in the futures market. And again, I am using the A version, which suggests and carries a more, one would say, bearish outlook, and that it's the beginning stages of a much larger, little bit more further out, like midterm, bar term picture for a move going down. And the way I've laid it out is that the high that we saw back in late March, the 31st of March, actually, was, and that would have been here in the S&P at 5,333. And that completed the primary B wave. That's the highest level. The primary B wave is a part of a cycle fourth wave. So the cycle fourth wave remains engaged at the moment. And the rally version is now done and produced a new all-time high. So it's an irregular B wave. This is all my opinion. And then we're coming down within that primary C wave. And within that, we're in the very beginning of it. I believe what we're counting out right now is a minute degree, 5 waves down to form the first wave of minor degree down. So if we're starting all the way from, we're in a primary C, coming down, we're in intermediate wave 1. And within that, we're just getting ready to maybe finish minor wave 1. So if that being the case, we label 1, 2, 3, 4. Now, one thing I wanted to just start bringing up before I actually get into what actually happened today, I want to discuss and just show you, these are just trend lines. They're just trend lines. But I want you to see how the market on both sides is following a wedge right now, a wedge. So that's kind of where we've gotten to. Have you ever really felt you're like boxed in? And so I am beginning to feel that the winner is actually going to also produce the direction in which we head until either a third wave up as a part of a minor fifth wave up breaks out and goes. And I want to show you this candle on a 4-hour basis. You can see it's just one and it's green, barely. And it's an inverted hammer. It's in a candlestick, which is a more bearish because it's the end of that downside, the end of that move. And so, again, I know how I started, but let's just go over very, very quickly. If this is minor wave 4, and we're in minor wave 5, and this is minute 1, and this is going to be minute 2, then this was the start of like, get out of the way, we're in minute wave 3, and we're just going to go. And if you remember, as I spoke yesterday, I spoke that if it was going to go, we needed these. We got them. So I'm like, okay, all right, go, little move, break above, get this thing going and show the light. Well, it stopped. And in 45 minutes, gave up 87% of the rally. Boom, in 45 minutes. Now, yeah, it just gets really interesting because it took 45 minutes to get up there and took 45 minutes to come back. So it was interesting to say the least. Now, again, putting that together and taking it back out to the market, I'm like, wow, all right, what do we have left? The Fed, initially, they liked it. So let's just give a little bit of word here to the Fed. What I spoke about, and what I talked about just prior to this, was that the expectation was basically that the market would not, it has not factored in whether we're going to get a cut or we're going to get a hike. We're back dead neutral, so nothing, right? So the move would have to be based on something else. And so one of the things that Powell did talk about today is that it has begun and will continue to ease the pace of the quantitative tightening that they do. So, and what that is that instead of removing 60 billion from the balance sheets, right, just not putting it back out there, taking it in and leaving it off, they're going to take that reduction. They reduced it to 25 billion a month starting in June. So that releases money back out into the system and in effect should start to bring rates down. But then they're saying, well, we're still going to be 5.25, 5.5. All right, so, but if things are correct, if the, you know, what I really want to say, if the stars align, if everything just is perfect, and we all sit around a campfire and sing Kumbaya, okay, we'll cut rates. But, and that's a joke. So, because the market is just like getting almost what I think can be almost schizophrenic a little bit. And here's what I really kind of want to just add to all of this. Not that this is a bad thing, but all of these things are in development. I do believe that we have a lot of algorithms out there running, and I do think that there are a lot of people that write code, that have the ability to write code, and they're getting in to pull these algorithms and tweak them and refine them to auto trade. And they can just go wild. You know, you just saw at points today, they were just buying. And whether they're buying the stock, whether they're buying options, whatever they're doing, they're out doing. And they did it kind of en masse today. So at one point, when they talked about quantitative tightening and how they're easing it, right? So they're letting the grip, they're widening the grip or softening the grip a little bit there. And so that's would be considered more bullish for the market. And it took off. And it took off wonderfully and was like heading up, like it was going to break above a level that it really needed to, which would have been the 4-hour 200. And that was at 51.46, looking for 51.50 to get tested and possibly broken. So almost only in hand grenades and horseshoes. So in any case, I now have put these lines down. And here's what I think. If we break above it, hopefully it then breaks above the 4-hour 200 and it keeps going. It breaks 51.50, which is a level, and there's a lot of talk about that. You got a lot some gamma stuff going on up there. You got, you know, volatility, the whole shebang. So what works against all of this, by the way, and contributes to both speed going up and speed coming down, is it was thin. And often it's like, you know, okay, today was the 1st of May, and so maybe there was just a lot of exiting into the close because of money being withdrawn via, you know, taking it out of the ETFs, and so it's selling it. And those orders came in and they waited to the very end to actually start to do them. I don't know. In any case, S&P, if the market breaks above, and I'm just going to put it where it is, and I left it out here so we could really see the whole pattern and see the nature of this. Now, to me, it's like, I wouldn't really draw it as a triangle, an Elliott triangle, because there you connect different points. And I would think that if it's ABC and this was a D and this was an E, it still could be a 4th wave and we can move it down there, and then it should really, right? What happens out of a triangle, out of an Elliott triangle, is that it thrusts out of that triangle. Well, that was a pretty strong thrust, I got to tell you. Now, whether they carry that through and it comes all the way down and breaks, to be seen, to be noted. Same thing going up. I mean, it ran up there. They slammed it down. If they come back in and go like, I'm sorry, that was a mistake, and they run it back and they break this higher level, and that would, let's just give it a go and say it comes in here. We'll give it a day. You're talking 51.33. Well, then it's the same story. Keep it going. Get above 46, get above 50, and keep the pressure on. That's what I think is going to have to happen, because it's going to be a third wave, and B, the targets are way up here. The market would be expected to rise above 53.33. Now, there are, here, I think it's going to be like 53.50 or up that in those areas. There's likely going to be a call wall. And not going to really go into detail because some of these guys get a little upset about that. So, but there will be other things that come in and out up here. Volatility ends up flat. On the way up, they were kicking butt to sell volatility and buy the volatility in the underlying. It was incredible. And you could see it. That's when you just look and you go like, oh my God, buy. And it just flies. And then it was flying because there was a lot to buy and very little being offered. So you had to move it to fill order. It was a crazy situation. Nonetheless, back out here. I think that coming off, that's where I've set up these fibs. If we're running it looking for minute wave 5, we are comparing it to minute wave 1, which is right here, run it over to here, and now we have it here. Well, obviously, for that 5th wave, we'd be looking for it to come below 49.63, which is the current low that we made on the 19th. Actually, this says the 18th of April. And then that exceeds 100%, right? 100%, which is the most common, is 5,013. But I'd be looking for that to get broken. It breaks below this level, which is, follow this line. This is the perfect, right? There's the connection, and that was the low at 5,037, almost 38. The next one came down, and it got to 5,042, and then the last one came down, and that got back also to 5,042. So these two equaled, and that one wins. But you can see they stopped because it's a rising trend line. It's rising, and it stopped. And it also produced an inverted hammer, so to speak. Now, if I take this down, let me see what it looks like on the hourly chart. On the hourly chart, it just looks like a little turd. Like this was like, oh my God, right? Bullish engulfing of everything. Bearish engulfing, totally engulfing. And then like the relief, I hate to say it, but I'm going to do it. The relief turd. I was like, you ever get that you're running, you got to get somewhere, and you get a fright, and the last thing you do, it's like, yeah, the body moves, and that's why I call it. It's like, oh, got scared, and boom, that's the result. A little turd. Now that might be the start of something, or it's not, and it just kind of comes down and goes this way. To be seen. And if it kind of comes down and it breaks, then I'm going to be looking for it to go. Now, the daily chart, opening up, you can see it's an inverted hammer. And so that actually is a strange little pattern in and of itself, because that was a negative bar yesterday. Today could have ended up positive, but they came all the way back down here. So if it continues to go, then we're looking for here, maybe even here. Ultimately, cycle-wise, that low, we're moving. We're into that window. We're there. And today I thought, okay, that was it. Those cycles were beautiful. And this was the launch of the cycle turning and heading up. So all that upside pressure, just like go, 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 go. And then for it to reverse, just kind of like goes, well, okay, maybe there was one more that's going to just, because that window is actually into this first week. So end of April, beginning of May, this week. So we still have 2 more days. And I don't know if we fall fast enough or far enough to finish minute wave 5, minor wave 1, and then into what I was talking about. It one more down leg, and we get a rally, and that rally could really hold us in between 5,033, 5,333, and wherever this thing bottoms. But I'd really be looking for probably more like 618, which is likely going to just bring us up into here, back above 5,200, but in an ABC and a little bit longer term than a day and a half. So I'm looking for it. Now, the other side of the coin, the B side, would suggest that this is still minor 4. This is minute wave 1, and this is minute wave 2. It was like that coming back off like that. So what possibly could we do? There was an A, a B, and a C, and then what? The 2 goes up here? No. The 2 belongs down here. 1, 2. So what was that coming all the way back down? So it gets interesting. But I'm going to let the market tell me. Now, moving averages, here we are on the daily. 200 is like, oh yeah, I'm napping down here below. And the 50 was like, yeah, okay, I'm waiting. See, they both were flat, even after all that movement. And even the 13 and the 20 were both still pointing lower, even with that move. Went up and touched it, backed off, and came all the way back down. So interesting. Tomorrow is tomorrow. Now, also, let me just state, we continue with our numbers. And what we have coming out tomorrow are initial jobless claims, U.S. trade deficit, productivity, unit labor costs, and factory orders. The first 4, 8:30 a.m. That's initial jobless claims, trade deficit, productivity, and unit labor costs. 10 a.m. factory orders. And then also tomorrow, Apple Computer reports after the close. All right, let's go over to the NASDAQ and see what that beast had in for us today. And it truly was a beast. I mean, again, I tell you guys all the time, I'm a day trader, and I trade off of a 1 minute, and then I also have a 2-minute screen, a 5 and a 15-minute screen, and that's what I'm making references to. So on the 1 minute and the 2 minute, and actually even the 5, there were a lot of tails, up and down, tails, and that just tells you chop. It's just like we're getting nowhere. Just go up, down, up, down, up, down. And so there was periods of just like, if you caught it, great. If you didn't, no problem, because there was a lot of giving money back until the Fed. Then I was like, okay, just jump on board because this thing ran, and it just ran. And again, you're a day trader. It's like, I don't care. I'm going to ride this as long as you want to take it. When you're done, I'll jump off, give the old tip of the hat and say thank you. Because well, if you still were wanting to trade, it went all the way back down, and then it did it pretty much in the same fashion it went up. And I've been like, wow. So, and it was good money, both directions. Okay, so here in the NASDAQ, same deal. I'm pulling it out. This is a bigger screen, and that's so I can show more of all the whole deal. Again, I was all set to keep this as a minor 4 and this a minor 1, minute 1 and then minute 2. And that was while they were like going, screaming, they were going to go and they were going to break and keep going and break above 17,950. And that would have been here. And it's like, you're in the clear, go, go. As it heads up towards 18,709. But first we needed still to get above 18,050. But I thought, oh my God, look at that. We're going to get close. Maybe we'll even get to it because they were just gobbling until they didn't. So keeping those in place, keeping the more bearish look in place. In other words, that high there on this one is on the 21st of March, is where the primary C wave completed. Excuse me, primary B wave. And that's a part of the cycle, fourth wave. So within it, 1, 2, 3. I know, didn't break a rule, but it's big and it's weird. But this is the A version. 3, 4, and we're coming off. And look what I put there. I put a wave 1, and I was ready to, I had it set up 1 and put a 2 here. And we were launching in a third. Can I say that it won't happen? No, not anymore. Not anymore. You're just not going to step out on that wing. Watch you get flicked and ticked right off. But that's, again, what I would think would have to happen if it is indeed a third. And what we saw today, all tucked inside of this thing, you're going to see, if we break it down to a 1 hour, it just is 2, up and down. So if I break it down to a 15-minute, what's it look like? Doesn't it look like somebody just gave somebody else the middle finger? Right? Isn't that what that looks like? So here it could be, oh, there's our low, ABC. Oh. So if that was the 4, then it's a 1, 2. And then this is 1, 2, 3, maybe. Now, if indeed the minor 4, let me get out of the 15-minute. Let me go to the hourly. If this is minor 4 and this is 1, and this has got to be wave 2, or was this A, B, C, 2? Maybe. I'll give the NASDAQ that. We got Apple tomorrow. Who knows what's going to happen? But right now, 1, 2. If we break, again, same deal, we're looking here, and that now comes in at about 17,412. So let's say it breaks 17,400. Man, we're going to be heading for this sucker, which is 17,113, I think it is. Yeah, 113. And if that breaks, then we're going below 17,000. And I think it could be a real quick trip from 71 to 17,000. I think it could go real quick. And then below is where we'll start to find some support. And I could fill part of that in by going back out. Yeah, see, I'll tell you, you get a little tired of continuing to put it in and take it off and put it in because of what the market wants to do. So we're going to go down. I'm going to put it back on again, and that would be wave 5. So here, so if it breaks, definitely looking for it to kind of come down and break 17,295. That's where wave 5 would be equal to wave 1. Well, not good enough because we need it to come below there. So that breaks, and then we get 1.618, which is, guess what, 16,890 into that hood. 16,900, 16,890, little overflow. If they really get nasty with this thing, 16,770. If they get super nasty, 16,240. So, because the thing is, it's like they didn't like it. And if it really stays thin and they just really start to kick, this thing, because the other part of Powell's stuff today, trust me, was talking about that it didn't look real bright, that inflation is being real stubborn. Inflation is kicking itself up, and that is coming through. But they're confident. They're confident that they'll be able to reach their target of 2%. Okay, that's great. But like me, right? I'm confident that one or the other is going to come through. When? I don't know. I guess I'm right up there with them, right? When do you think this is going to happen? Well, we really can't say. Can't really say when we're going to start. We're starting a little bit, right? Quantitative tightening, we're backing off a little bit on that. So we're releasing a little bit of that flood back out. Okay, so what can you expect? If it breaks and it breaks, look for these lower levels. I'm looking for a minute fifth wave down. That is the A version, minute fifth wave down to complete minor wave one. Then we get another. And I believe 18,709 would remain there. And that's going to be your upper boundary. And wherever the thing bottomed out, you got an ABC that's going to come in between, likely from wherever it bottoms, 618 back up to that top. But not all the way up to the top. Maybe back up into side this 4, maybe back up into a little bit higher. But you get an ABC, and that's going to be minor wave 2, and then we drop. And then I think we're out. I think May can take us down. So we get done with this, go up, maybe come back down. It's going to be interesting. That I'm going to say. Moving averages, 4-hour chart. They're all like, these two got right up next to the bar going like, what are you doing? Trying to provide support. And it broke right through them before they could even get to them. The 50 was already turning lower. Came up, broke it, took it back. So again, and the 200 is way up top. So right now it's 200, it's 50, 20, 13. And guess what? That is in alignment on the 4-hour chart to go down. Okay, different than the S&P. The 4-hour chart, here's the 200, here's the 50. So the daily picture is a little bit different. And again, here, it's an inverted hammer, came right down to the bottom of that little triangle. Right down to the bottom, touching it. So break, could make go a little quicker. All right, I am going to finish it there. I've already gone over what comes out tomorrow. Apple after the close. Next update will be on Thursday, May the 2nd.